Well, March natural gas futures edged higher at mid-session Friday after holding above Wednesday's low, triggering short covering ahead of the weekend. The failure to break lower signaled exhaustion on the downside, encouraging traders to lock in profits and reassess positioning. From a fundamental perspective, the market continues to be underpinned by strong LNG exports. Elevated export flows have created a solid price floor and are expected to remain a structural support factor through spring and summer. The restart of activity at Golden Pass LNG adds to this narrative, as federal approval of its lateral connection to the Trident intrastate pipeline enables up to 1 billion cubic feet per day of Permian gas supply to reach the terminal. This strengthens the long-term export outlook and reinforces demand for feed gas. International demand is also contributing to the bullish tone. LNG offtake from Asia remains firm, with South Korea expected to increase imports by roughly 6 to 7 cargoes week over week during mid-February. At the same time, a cold snap across the eastern U.S. is driving short-term consumption higher, with temperatures falling into single digits and the 20s, pushing heating demand to elevated levels. However, the latest storage data reflects a mixed backdrop. While export demand remains structurally supportive, weather forecasts have shifted warmer beyond the near-term cold, introducing a bearish element. The market is gradually approaching shoulder season, when domestic demand typically softens. Moreover, drilling activity remains resilient. U.S. energy producers kept the natural gas rig count unchanged for a second consecutive week, according to the closely watched weekly report from Baker Hughes released Friday. At the same time, the EIA projects that dry gas output will increase from a record 107.6 billion cubic feet per day in 2025 to 110 billion cubic feet per day in 2026. This supply growth is expected to coincide with a stronger price environment, as spot prices at the Henry Hub benchmark in Louisiana are forecast to climb roughly 22% in 2026. Still, LNG exports are now functioning as a near-equal pricing driver alongside weather, reducing the market's historical dependence on temperature swings alone. Technically, natural gas continues to respect strong support at $3, a level tested multiple times and repeatedly defended by buyers. The recent failure to break decisively below $3 confirms that sellers are losing momentum at this floor. As long as this support holds, I expect prices to consolidate above $3 until demand begins to increase or a clear bullish catalyst emerges. A sustained move above $3.15 would open the path toward $3.30. If prices break and hold above $3.30, the next key resistance stands near $3.50. If you're looking for a more detailed breakdown of the market, consider joining the channel. Members get early access to new videos, so you can see the analysis before everyone else. Thanks for being here, see you in the next update.